welcome. You're watching Countdown right here on Bloomberg Quint. The markets seem to be witnessing a lot more pain this afternoon, closer to 2% given up on the benchmark indices. We'll talk about all of the moving parts and more in just a few moments. But to take you through the headlines, markets see no respite from the ongoing pain. Benchmarks and broader markets correct over 1% each, in fact now moving to 2% with the Nifty below the 10,250 mark. Reliance Industries is among the top laggards on the Nifty after its plans to acquire majority stake in cable service providers Hathway and Den Networks. There seems to be no end to the NBFC correction either. Indiabulls Housing Finance is down over 10% for yet another day and is leading the losses on the index. And Mindtree sees its biggest intraday fall in 7 years after its second quarter earnings. The management says it expects the third quarter to be better than the current one. Good afternoon, Neeraj.
Hey, good afternoon, Devang. And well, there doesn't seem to be any respite really. We're back to those levels from where we showed a bit of a bounce earlier on. Just bring up the Nifty 50 and about a couple of percentage points lower, 195 points and counting. The Nifty Bank has not fallen as much, and that is predominantly because it's Reliance and the IT names and some of the other pockets which are leading the charge lower. Though the Nifty Bank, which was just the late fall, has actually been led by the Nifty Bank. So from here to here, this 1% correction in the Nifty Bank that we're seeing is also the reason why the Nifty is now down 2%, because banks were not participating earlier. Now they are participating. Bring up the heat map and you will see what I'm talking about. The mid caps and the small caps, remember, are also clobbered, but just the heat map. And look at this. So we've been used to the cuts that we saw in Indiabulls Housing Finance, Reliance Industries, HCL Tech, etc. But now HDFC is down about 4% in trade. Axis Bank 3.5% in trade. A clutch of other names. Yes Bank, of course, continues to grind lower, another 6% lower in trade as well. So the banks in the last 1 hour have corrected, and that's leading to further pressures that is happening on the Nifty as well. But clear pressure points out here on IT, on Reliance and NBFCs. Devang will highlight a lot of NBFCs, I'm sure. Just to point out the gainers, the few and far in between, some semblance of buying for HUL and the likes of ITC, etc. Some gains for HPCL in the session today, but just too few and far in between really. The day belongs firmly to the losers. But it's not just the large caps where the financials have taken a hammering, Devang. The mid cap end of the market, a lot of battered and bruised names.
Well, you know, you pick up the two biggest losers from this space. I mean, if you take IT, you take mid-cap IT, you take the NBFCs, across the board there's pain. So I'll start off with, you know, what's been happening, and particularly the result boys. You fail to beat the street expectations and you're punished heavily, and that's the case with most of the IT mid-cap names. Mindtree is down 15%, heavy cuts in an emphasis, which is now at 1,067. Silent is down 1.5% as well. Some of the bright spots and movers that we're seeing in trade today include the likes of a Jet Airways, with the talks of Tata Sons being interested in picking up stake in the counter. It's up about 5.6%. Lakshmi Vilas Bank is the other one which sees some interest in today's session. And NIT Tech, remember when it reported its numbers, good strong set of numbers. That day it rose, and yet again it's you know, being carried forward in terms of the good momentum. Losers from the NBFC space, you've got a Punjab PNB Housing that's down heavily, about 17% given up. IIFL Holdings is down 12%. Devang Housing Finance is down 10.5%. So the losing spate continues for most of them as they buckle down in trade today. Among some of the volume buzzers, you've got an Indiabulls Real Estate. So the NBFCs and the real estate pocket witnessed heavy selling in today's session. Indiabulls Real Estate is down a massive 10% on the back of about 60 lakh shares which have been traded. Pirimal Enterprises is down about 9% on the back of 16 lakh traded, and a Dish TV loses 8.5% on the back of 73 lakh shares traded, and this is definitely much higher, almost 3 to 4 times higher in terms of the volume if you have to compare it to the last 20 days average. But let's take a look at what's been happening in the futures and options space. We've got Agam who's joining in for that. Agam, good afternoon.
Good afternoon, Devi. Now, well, there's no doubt about the fact that there has been well, a lot more selling pressure, considering the fact that both the major indices are down quite substantially, even on an intraday basis. But the open interest for now, it seems, is not that high, considering we have seen just about a 2% uptick when it comes to OI. So at this point in time, a lot of traders are uncertain, which is why a lot of traders are hesitant to take any positions as far as the futures are concerned, or increase positions. But that is not the case when it comes to the Nifty banking futures, because that's where you've seen a surge of 29%, even as the underlying declines by, well, a little less than 1%. Let's pull up the India Volatility Index and see where that stands. Now back nearing the mark of 20. It's up another 11%. This could be a cause for concern. This certainly means that there has been an expansion in a lot of these option premiums. And speaking of options, let's pull up your change in open interest as well as your open interest distribution in today's day of trade and see where there is substantial activity. Now, as one might expect, and while you see a maintenance of the 11,000 call as the one with the max OI, you're starting to see a considerable increase around the 10,800, 10,900, which gives you an upper bound for the Nifty, at least in the near term. On the lower end, you are seeing considerable, writing towards the 10,300, 400. That said, let's not forget that we have seen the Nifty come off below 10,300, and we have seen unwinding in some of the relatively high level options, whereas more writing in something like the 10,400 call. This again could be a cause for concern, because at this point in time, with an hour to go before the close of this session and a close of this week's trading for that matter, well, it seems that people are and traders are betting against the mark of 10,400. Well, speaking about stocks, Mindtree is one stock which has been taking a hammering, largely on account of valuations, though its earnings were largely in line with the expectations. Besides Mindtree, we are also keeping an eye on ACC, again an earnings reaction. That has seen a 35% increase in open interest among other stocks. So we also have plenty of others, such as Repco Home Finance, which is also reeling under pressure, and of course several other housing finance companies, along with some NBFCs too, which are taking it up the chin. On the whole, it's not turned out to be a very good session, and we have to wait and watch whether or not there will be at least some respite offered in the final hour of trade.
Okay, Agam, thanks a lot for putting that into perspective. So that's the F&O movers for the afternoon, and clearly pressure out here. The main talking point in today's session, and also in the previous fall when we went down to almost these levels, was what was happening to NBFCs and the resultant sectors. So real estate, for example, and one of the sectors that is in heavy conversation today is the realty space. The index may be down 40% on a YTD basis, but that's not the point. The point out here is the belief that people have that because of the tight liquidity, there could be issues for the real estate sectors, multiple ones at that. Let's talk about all of this and more with somebody who looks at this space very, very closely. Anuj Puri, he's chairman and country head of ANAROCK, joins us right now on the phone line. Anuj, good having you. Thanks so much for joining in. Not the best of times for the space to talk about, but Anuj, I remember a conversation that we had early in the calendar year when there were some green shoots of revival. We were talking to the Supertech management today, and they were saying that sales have picked up. But despite all of that, with the liquidity tap from the NBFCs virtually shut right now, is it going to be a problem for real estate developers? The one space from where they used to get the money is not coming in, and therefore the only choice is to slash prices and do more sales.
So you're absolutely right. It used to be the public sector banks from where they used to get the liquidity, and that closed down. Then it moved to the private sector banks, and that closed down. Then in the intermediary time, there was a little bit of private equity that came into brownfield. That closed down, and really the lifeline was either sales or NBFCs. Given that the sales had been slow, a lot of the dependency of the developers was on the NBFCs. And what has happened in the last 3 to 4 weeks with the NBFCs getting more stricter and their funding getting dried up has definitely caused grief and concern within the developer community. While sales have improved, but the quantum of money that is required by these developers cannot necessarily come through so quick sales as the quantum that would have come in from the NBFCs. So clearly that NBFC drying is creating ruffles in the weather within the in the feathers of the developers.
Anuj, to that point and carrying it forward as to not much can come from sales. I mean, there have been comments talking about a maximum of 1 or 2 months that can be, ride through with sales, but then you do need that NBFC money to sustain that amount of growth. Anuj?
So clearly, if the NBFC money wasn't really going to come through, then there will be many developers on the mid-scale that will need to go through a fair amount of consolidation. And what I mean by consolidation is that they will have to start giving their ongoing projects either on joint venture or joint development or development management to perhaps stronger developers who would have an ability to be able to fund those projects and would have a better ability to be able to sell those in the marketplace. And that's what I feel is over the next quarter or so, you will see much of the consolidation within the developer, within their projects happening.
Anuj, just looking, one, we don't want to cause alarm bells out here, but just looking at the way the situation is right now in terms of the demand versus the sales happening, is it looking as worrisome as it was, purely in terms of sales and not in terms of developer liquidity, or purely in terms of sales and stress? Is it looking as tough as things were looking, say, back in 2007?
Fortunately, what we are finding this festive season, the sales has really picked up compared to last festive season. So Dussehra 2017, and when we're comparing the numbers that are starting to come in, I mean, we sell about 1,400 apartments a month. We're seeing that this Dussehra has been a lot more stronger than the last Dussehra in 2017. So, there is that brightness that we are finding it out, where perhaps the property prices got corrected, perhaps new financial schemes came in. Many cases, the developers have started to absorb the GST under construction, and we've started to see the sale momentum increase dramatically, I must say, over the Dussehra of 2017. So, that certainly is good news. Fundamentally, that is what we wanted. So, it is moving on to the right course. The only thing is that the immediate liquidity that is required has dried up, but I do feel is that fundamentally the sector is coming out from a position of weakness that was there 12 months ago to clearly what we are seeing at this stage.
What pockets are these sales happening? I mean, is it only happening in metros and Mumbai and some of the other pockets, or is it happening across? And Anuj, is it happening at a lower price point? Because hitherto, the complaint that I think a lot of people have about a city like Mumbai, for example, is that you go with a check and yes, the prices are off, but the headline prices have not really come off. Have the headline prices have now started to come off?
So I would say in terms of the areas, certainly Bombay has started to really pick up. Bangalore was doing well, continues to do well. Pune, Hyderabad. I think NCR is still slow, and in my opinion will continue to remain slow because there's a lot of investor-held inventory. Until those investors don't exit, the developer will not be able to sell their inventory. So clearly, Bombay, Bangalore, Pune continues to remain very robust, or much have than what it was before.
Anuj, up until now, in order to chase growth, most of these NBFCs have been lending pretty rapidly to most of these developers. In fact, in some cases, more than the underlying value of the assets itself, which makes most of these developers sitting on a huge amount of debt, and servicing the debt right now becomes a big issue. Do you see this leading to defaults from more developers now?
So my feeling is that before they default, they would go into consolidation. What I am seeing is a huge amount of activity over the last 30 days where some of the marginal developers are going to the stronger developers and wanting an arrangement to be done very quickly, where the debt from the marginal developer moves on the books of the stronger developer. And that is where I do feel is that it will get bailed out because of this consolidation. And in the process, we've been talking about this consolidation, as you would recall, for a long time. I think this will happen now a lot more quicker than what we may have thought by the marginal developers very quickly not wanting to default, but wanting to get consolidated with a stronger developer.
My point is even the larger developers are sitting on huge amounts of debt because they've also, we've been seeing the projects that have been going countrywide, and for them to consolidate and take the loans of the smaller developers on their books, the stretch on them also is going to be much, right?
Actually, that's a very, very valid point, is that, are they going to be able to consolidate everyone? I don't think so, because, the stress will just come on the stronger developer too much. So, there will be some that will get consolidated. There will be, few, hopefully few. I was going to say many, but hopefully few, which may not get consolidated. So you're absolutely right. I do not think that the market is going to completely come out of it because just a few stronger developers, they are not going to be able to help a large number of marginal developers.
Anuj, one final question from my end would be, would you believe that prices could come off a bit because of this very need for immediate liquidity that builders would have, and save for 2 or 3 or 4 or 5, almost 90% of the developer community would need to undertake some immediate sales in order to get liquidity? Are prices in a risk for a correction, and if so, how much?
So it is a very, very interesting point, and we are also seeing that to be able to garner immediate liquidity, are they going to be willing to cut the price perhaps dramatically? We're not starting to see that sign come through from the developers, and there could be several reasons. Maybe because they've sold partial inventory at a much higher price, and hence, they're reluctant to sharply bring down the price. The second could be is, if they bring down the price, would the prospective buyer think is that they have ability to bring down more price? And third, perhaps more importantly, is that in the NBFC's book, the price is at a certain value, and if they start to sell it below that value, immediately they're going to get caught out in the market. So we're not starting to see those conversations happen in the marketplace by the developers, where they're saying is that we will dramatically bring down the price, but bring in that liquidity. I think the conversations have largely been driven on the consolidation, not as much on the price cut.
Okay. Sorry.
No, I was just wondering if, area-wise breakup in terms of the key stress regions across India is something that we can probably have a highlight on, if you've managed to get that.
So high stress region, certainly remains NCR. That is where we're seeing, whilst there is sales activity that is going on, but largely it is the investor, speculator who held that stock. They're the ones who are selling. So it is not as much the developer who's being able to liquidate their inventory. So clearly that remains a stress point. I think some of the other regions, certainly as I said, is MMR, Bangalore, and Pune are liquidating and being able to do perform well. Chennai and Calcutta are small markets, lackluster, but because they are small, they are not as influential within the Indian realty space. Hyderabad is certainly doing the best amongst all. Lot of economic activity that is being driven. We're starting to see energy in the developers. I think it was also one of the markets who had got left out, and they have now caught up, and hence really remains the strongest in India.
Okay, Anuj, we'll leave it at that. Thank you so much for taking the time out and being with us today. Appreciate your time. Well, Ultratech Cement numbers are out. Standalone net profit 390 crores. That's lower than our estimates of 418 crores. Revenue numbers too at 7771 is lower than our estimates of 7873 crores. I'm waiting for the margins and the EBITDA numbers to be up there as well. Just the flash will come up on your screen. but I would reckon that standalone EBITDA at 1207 crores is lower than what we are working with, and while sales have been lower than what estimates do, I believe that the EBITDA margins at 15.5 leaves a bit to be desired. Pull up that stock price for you. It was down about 3.5–4% ahead of the numbers, now 4.73%. I would guess realizations too would have been under pressure in a similar vein that realizations were under pressure for ACC as well. So, yep, the numbers don't look interesting, and this is the second large company to come out with numbers which are disappointing and probably sets the tone for the industry. Not the best of numbers from Ultratech. We'll watch out for the volume growth numbers and the realization numbers to come out. Nikki will probably throw lights on that, but the numbers don't look all that great. Okay, Avinash Gorakhshekar of Jointer Capital also with us for a quick initial comment, then we'll get in Nikki for the other details too. Avinash, just quick prima facie comment. What do you make of the numbers?
In fact, Neeraj, can you tell me what is the bottom line number? Because I've not got the headline numbers.
It's at 390 crores and the headline number is 7771 crores.
In fact, the top line has come in slightly better than what our expectation was. Our expectation was that top line would be roughly about 7,850 crores. But the bottom line is definitely, much below expectations. In fact, largely, I believe, the fuel costs in this quarter have risen considerably, and that has obviously hit the operating margins and the bottom line. But overall, I think volume growth should have been better. If you consolidate the JP number and the standalone number, I think volume growth in this quarter was the only solace. Obviously, margins have come down because realizations have taken a hit, and energy costs have gone up in this quarter. So these numbers definitely don't look all that great. I think whatever volume growth expectations the management puts out and how the business pans out for the next 6 months is going to be more important for the stock, because the stock is actually priced quite at a premium to other cement companies. So I would at best say that it would be a market performer and would see a little bit of correction post these numbers.
Okay, Avinash, you would want more details. Let's get in Nikki to talk about those details. Nikki, what do you have for us? I mean, what are the finer points?
Sure, I'm going to start off with the revenue growth numbers where it's in line with what we were estimating. It's around 21% uptick there. 7,771 were the numbers that have come up. And EBIT, net profit of the company, is down by as much as 9% at 391 crore. Now, we were estimating a dip of around 2%. The dip is 9%. So clearly, we're seeing the disappointment creeping in on account of operating performance of the company. EBITDA down by 7%. We were expecting a flattish trend there too. So clearly, we're seeing the operational inefficiencies creeping in, which on account has been weighing on the bottom line performance of the company. Margins have come in at 15%. We were estimating it at 17%. And let's talk about the volume figures. They've almost come in line with what we were estimating. Domestic sale volumes have been up by 21% over Q2 FY18. Now, we were estimating a 22% of growth at that 16 MT kind of volume figure. But the press release also mentions that the rising energy and the logistic cost coupled with rupee depreciation has resulted into cost escalating by as much as 14%, which in turn has weighed down on the bottom line performance of the company. So clearly, it's rupee depreciation along with the rising energy and logistics cost, which is to be blamed for poor set of performance coming in from Ultratech Cement.
All right, Nikki, thanks a lot for that. So that's breakup of Ultratech's numbers. Domestic volumes, though, as Nikki highlighted, have pretty much been at par with expectations, but rupee depreciation, overall rise in costs have had significant pressure on Ultratech's numbers. The stock has recovered a bit now, but still down about 3.7% Sanjeev Bhasin is joining us right now on the phone line. Sanjeev, thanks very much for taking out the time. What are you making out of Ultratech's numbers? I mean, optically, it looks like a miss on the bottom line. Volumes have come in at par with expectations. But what's your sense now?
Well, we know that this quarter there have been two problems. One was the rupee weakness and second was the increase in petcoke prices. But I think they've handled it well. 20%, 21% growth over a previous quarter is fairly robust. And, you know, we think that the best of that the late rains may have been a little bit of a dampener. We think going ahead, we are seeing robust pickup in a lot of the housing projects, and we think that will be the key going forward. Cement sales are generally strong after the festival season. So I think this is a very, very good opportunity to buy Ultratech. We think around this 35.50, it would have priced in all the negatives. And the stock, this is the best time to buy cement stocks because this is where the rally starts. last quarter was a surprise on the upside, so people had built up a lot of pressure before the results. But we have a long-term rating on Ultratech with a target of 4,300 in the next 1 year.
The cement sector as a whole, Sanjeev, for you going forward, do you see a pickup post the festive season?
Definitely, we think a lot of the stalled projects will come back onto light. We know NBCC and the likes have been given the go-ahead to pick up, errand builders projects. And from what I made out in a lot of builders, small cement players, they are saying the Terai region is seeing unbridled demand scenario. So I think this is a very, very good opportunity because we think cement is going to be one of the forefront along with commodities, which will play very, very good catch up from November onwards.
But just a concern on most parameters, and I'll come to you, Avinash. The last 2 quarters, particularly quarter 4 of FY18 onwards, on most parameters, be it on the top line, be it on the bottom line, even EBITDA margins, it has been on a continuous downtrend from last quarter as well. So does that raise a few red flags for you?
Look, this is not a sector where there will be incremental pressure on margins, like you rightly pointed out. But I think this may have been a 1 quarter hiatus because of both the rupee depreciation and the increase in petcoke prices. Going forward, I think they've rationalized that, and the JP numbers will again be on stream now. And that in the Madhya Pradesh area, that JP business is going to give you a huge upside. So I think that definitely consolidated numbers going ahead should be very, very strong.
Avinash, what are your thoughts?
No, I think I also second Sanjeev's view that the second half should be slightly better. If the rupee headwinds don't continue to accelerate the way they happened in this quarter, obviously volume growth has been good, which is a good sign. And hopefully, with projects picking up, I think the market should obviously give, Ultratech a decent kind of pricing power also. So I think clearly the third and the fourth quarter could be definitely be better. Our sense is that, these levels, the stock has a limited amount for downside. Most of the negatives have been factored in the price. But I think clearly, markets would like to await what the management commentary, or especially on the volume and pricing goes forward from here on. So overall, I would believe that, somebody who's having a 1 year view can definitely, look at the stock only on declines. Maybe with a little amount of correction, this stock could give a decent risk reward.
All right, we leave with that. Avinash as well as Sanjeev, both of you, thank you so very much for joining in and giving your initial take on the Ultratech cement numbers that just came out. So according to Sanjeev, this probably could be an aberration because of the kind of steep rupee depreciation that we've seen this quarter, but he does find some value at current levels in the stock. It's at 35.84 for Ultratech cement. Let's quickly look at what's been happening in the markets once again. So the Nifty is now down about 1.5%.
A bit of a recovery, a small bit of a recovery, if you can call it that.
Yeah. Picking up from the lows of the day at 10,300, had approached about 10,200. But individual stocks still not being spared. So when Indiabulls Housing is still down about 14%. Yes Bank is at 219, that's down 5.5%. HCL Tech, HDFC Limited, Reliance Industries. Reliance, obviously, the bigger pain point there, a sore area for the index as well. 3.5% lower. Ultratech cement now from 4.5% is down 3.5%. Infi is down 3.5%. So the bigger names are taking a bit of a beating.
Yep, that is certainly a lot of pressure in that space. PNB Housing Finance, by the way, has corrected 16%, and Piramal Enterprises at 1900 is correcting about 9%. So the pain in the NBFC space continues, and Dish TV, incidentally, down about 7% as well. That's a set of stocks which have corrected a bit. Mind you, it is not just local, actually, even global markets were playing a bit of a small sport in the session. In trade yesterday for sure, and in early morning trade today as well, there was a bit of a problem out there. We spoke to Bill Maldonado of HSBC on his expectations of a turnaround in the negative sentiment prevailing over the markets. Hear out what he had to say.
I think this is the question. So you're asking an excellent question, but the timing of that is very difficult to really ascertain with any degree of confidence, but that's exactly what it's about. So, you know, are people going to continue to be driven by sentiment, or are they going to be persuaded that now that we've had a correction, valuations are looking even more cheap, and with earnings growing on top of that, you know, maybe there's a compelling case. Realistically, I think it's difficult to see sentiment turning around on a dime. I can't imagine that things are going to change very, very, very quickly from a risk aversion, more negative sentiment back to a more risk-seeking sentiment that we had in place for much of last year. But if you wait for the turn, it's usually too late. To take advantage of the opportunities, you usually have to act before it's absolutely clear when the turn is going to come. But I think, yes, to answer your question, I think at some point in the not too distant future, the opportunities will be appetizing enough to lure people back and look at the fundamentals, look at what they're getting, and maybe we'll get a stabilization and a much more positive driven market.
Final question, Bill. If you look at India, and I know you look at India, but if you looked at India closely in the recent past, does India fit the bill of where people like you would put fresh money to work? If not now, then maybe a few percentage points lower.
Yeah, I think overall, yes. Obviously, there's a couple of specific things that are going on in India. One is we've got the election coming up, so everybody's watching the government in the lead up to the election, and it'll be important to see what the response is. So far, so good. I don't think that's been a big problem, but I think investors are going to be very focused on that. And the other one is we've had this NBFC issue unfold in the last month or two. Again, I think investors are very interested to see how that's going to be dealt with. There's kind of spillover effects into the financials in general. And again, investors are very keen to see how that's unfolding. So I don't think that takes away from the fundamental case in India. I think the fundamental case in India is that valuations moved up quite strongly last year. And what now needs to happen is that earnings need to come through. Corporates need to deliver earnings. And by and large, we've been seeing that. And that's great. That's very good for investors. And I think if that happens, then we can continue to see a virtuous circle. So I think there's a positive story there. I think investors are watching, but there's a couple of things that are very specific to India right now.
From Bill Maldonado of HSBC. Well, we'll get you more market opinion, but just before we get that, while we're talking about large caps and IT stocks in pain, it's not too different for select mid-cap IT names, and one stock that's been in focus is Mindtree. That stock is down about 16%. Agam Vakil joins in to talk about what are the possible reasons why the stock has been hammered down out of shape today. Agam, save for the margin miss, it didn't seem like Mindtree missed out on too many things, but the 16% downtick suggests that there was something that was a sore spot.
Right. So when it comes to the earnings, Neeraj, as you've already suggested, it really wasn't a miss when it comes to the top line or the bottom line. We did see the margins come over slightly below expectations, but we did still see an expansion. Now, among the concerns that were raised by analysts were that certain contracts that the company is signing, that there's a certain extensions, they are more short term as compared to long term, and this has posed a question on the consumer sentiment or the client sentiment at this point in time. Of course, besides that, there's also the matter of valuations. In the past few weeks, what we've seen is for all the companies where the earnings have come in line with expectations has led to a correction, especially the ones which were trading at heady valuations. And Mindtree is yet another example. And when it comes to the valuations, even after the 15% correction today, it still is in line with the valuations of Infosys. It is the second most expensive stock even after the correction of 15% in the IT pack, only behind TCS. And, it's more expensive than the likes of HCL Technologies, Wipro or Tech Mahindra, which are all nifty companies. So that is another case where we have seen heady valuations, make the best of, and that's the reason why we're seeing that substantial correction in Mindtree. Besides the fact that the macros, are a little bit of a concern, but we did speak to the management. The management continues to say that they are very positive when it comes to the outlook going forward. They are making headway when it comes to their digital commitments with respect to the clients, and there really are no reasons why anyone should be worried about the outlook, especially with respect to Europe and America. But investors are not buying into that, and that's possibly the reason why you're seeing that downtick of 15% in today's day of trade for Mindtree.
All right, Agam, thanks very much for that. So that's Mindtree there, getting a thrashing in the markets today, down about 16% in the session. Brijesh Singh is joining in right now with his views from StockAxis. Brijesh, good afternoon to you. And I'm going to quickly start off before we go into your index strategy on Mindtree itself, since we're on the topic. And the stock's down 16%. Nonetheless, on a YTD basis, the stock has really outperformed amongst the mid-cap IT names. So is this a time probably that you're seeing some amount of profits being taken off the table, or probably use this as an entry point as well?
Good afternoon, everyone. See, no, the thing, if we talk about from an investment point of view, definitely somewhere around 750 to 780 would be the level, you can look out for buying these stocks. As you've been talking about, I was just looking at the monthly chart, the rally from 399, that was a low on a month of November 2016 to the level of 1183 high. That was a one-way rally. The 183 high was on September 2018. So it was a one-way rally. And if we take it out, if we draw a Fibonacci retracement, taking this 2 points, the 50% retracement value comes somewhere around 785, and 61.8% retracement value comes around 685. So this 2 point would be acting as a support. 785 and 685 are the level which I would be, keenly watching out. Any downside if it comes. Definitely from an investment point of view, one can look out to buy these stocks. On the higher side, 950 to 980 would be acting as a resistance for a medium-term play. But for a longer-term play, I am looking stock going touching a level of 1400. This is purely from a chart point of view. This 1400 would be taking, say, another 1 year or 1.5 years.
Okay, on Mindtree there. What are you doing on the index though? Now we are once again made our approach towards 10,300.
See, index point of view, there is a high volatility been going on, but after making a low of 10,138 and we swing back to the level of 10,700, and again, we have been hammered down. Now this time the hammering is with the large cap, Reliance not outperforming, IT stocks not outperforming, so they are giving pressure to the index. So I would be playing for a short point of view, somewhere around 10,320 to 10,325. One can take a sell side with a stop loss of 10,375 and look for the target of 10,220. It can even go to the level of 10,140. This view would be till the expiry happens.
Okay, so those are some individual calls on the specific indices. Brijesh, while we're at it, your stock ideas for the afternoon?
See, no doubt individual stocks would be outperforming, or they are right now coming on the buying side. So if we take it out from the metal counter, NMDC looks good on the chart. Still, the stock has been trading on the higher bottom formation, which is giving a bullish sign. So anything below 109, one can take a buy call with keeping a stop loss of 105 and play for the target of 115. Another counter would be Shriram Transport Finance. Same pattern has been there. Even the trend line breakout has been emerged. So recent swing low of 980 can be kept as a stop loss. 1005 or 1007 has been quoting, if I'm not mistaken. So one can go for buying this counter for the target of 1100, or even the target can be extended to 1115.
So those are some recommendations. Brijesh, stay on. So much more to talk about. Let's get in a fundamental voice on the show as well. As the markets, by the way, have recovered a little bit. Devang Mehta of Centrum Wealth Management joins us right now on the show with his thoughts. Devang, good having you. Thanks so much for joining in. There is pressure on the financials in today's session as well, and we'll dissect each of them specifically. But broadly on the NBFC space, are you still on an avoid mode, or are you going out and selectively deploying money?
Thanks, Neeraj, for having me on the show. Good afternoon.
Pleasure.
I think clearly, yes, NBFCs is a space where there is a bit of sentiment dampener which is happening. We were selectively starting to have a watch list or a hunt list which we wanted to buy last week, but I think the negative news flow isn't stopping at all. And the second thing is that whatever you buy, you get it 10% cheaper the next couple of days' time. So it's not at all a confidence booster in terms of NBFC. I think the numbers for this quarter would be good, but the market has started to factor in the next couple of quarters where there would be a lack of growth or in fact even degrowth in some of this. So I think yes, selectively it is in the watch list, but still we don't have that wherewithal to go ahead and buy till the dust settles.
You know, Devang, so for example, let's try and dissect some of these. Almost everybody, every sell-side analyst has come out and said that the liquidity is not a constraint for Indiabulls Housing Finance. There are developers whose ratings have been done to default, but both the developer and the NBFC have come out and said that it's not a permanent default. The money is going to come in a week or so. So liquidity is not an issue for Indiabulls Housing Finance, but somehow the confidence of the market on this particular counter, which is a Nifty 50 name, has been put under suspicion. Where are you on this argument on Indiabulls Housing Finance, for example?
I think, of course, we don't have coverage on Indiabulls Housing, but on a NBFC basis or on a companies which are suffering the most the brunt of what is happening in the market. I think it's clearly started off with the IL&FS debacle, where sort of there was a liquidity crisis or a crunch which was started to establishing in the market, and now I think with RBI doing a lot of OMOs, I don't think the liquidity is an issue as sentiment. The prevailing sentiment is certainly a bit negative. A bit is again an understatement, but it's more or less a very big negative in terms of buying such stocks. And what I think is also for people to raise money for continuing business is also a type of a calamity at this point. So my sense is let the dust settle a bit. There is not as much an issue as the market is showing it to be on the screen. My sense is probably a bit of confidence building which comes in from the company managements as well as from the RBI would help a lot in sort of soothing the nerves of the participants, and maybe some of this NBFCs could be great portfolio bets, but I think it would sound extremely positive if I talk optimistic at this point, but to my sense some of the consumer NBFCs should be sort of looked into, if not housing finance companies.
What about real estate as a pocket? Because that also seems to be a little bit of a sore spot for the markets of late.
I think we have been clearly advocating not to buy any real estate company as such, as we all know that sort of it's never been a wealth creating tool. There would be a couple of exceptions here or there which are sort of zero debt or not much dependent on the market borrowing. But clearly, if you want to buy anything in real estate, there are enough and more proxy plays which are available in terms of the paints or I can say ancillary industries like maybe cement, which of course the initial numbers are not great. But I think there are ancillary companies like cement or adhesives or paints which could be sort of bought if one wants to buy real estate, and I think this slowdown could probably extend more into the next year as well. So more so real estate is a no-no, and ancillaries or proxies for real estate are clearly also finding good levels at this point.
Any specific pockets or stocks that you are putting fresh money in right now, Devang?
We like a couple of pockets in terms of in the financialization theme that we keep on reiterating. I think the CASA-oriented banks would sort of gain more market share at the cost of a lot of PSU banks and even certain NBFCs, where I think the lending would again start happening, but the low-cost deposits or the CASA would start to come in as an appropriate component. To my sense, the larger banks and certain even smaller banks with a decent CASA would come into the play. Non-lending NBFCs like insurance companies, which again sort of corrected big time, the likes of HDFC Life, the likes of ICICI ICICI Pru, again not advising specific names, but probably this would be the type of industry which would start coming back to the fore. The company like Havells, which came up with numbers yesterday, there was a margin miss, but the revenues are not suffering. So I think the electrical good companies, certain consumer companies, which again were overvalued and are seeing a bit of valuation correction or a PED rating. I think these are still pockets which though would not look to be very glamorous, but are, I think, good pockets to buy into in this type of fall.
Okay. There is, Devang, there is on the flip side, if I just look at private banks, there's now a chalk and cheese behavior within the corporate facing banks as well. The likes of Yes Bank, albeit for the news flow that has just come out on Wednesday, is reacting to a lot of selling. But ICICI Bank, Axis Bank and the likes haven't had too many bad days. ICICI Bank, in fact, in today's session too, is marginally in the green. How do you look at the corporate facing pack right now? And would you put fresh money to work here?
I think yes, a combination of corporate banks and as CASA, which I talked about, a few names like, of course, HDFC Bank or even ICICI Axis become decent enough trades during these times when HDFC Bank, of course, is the most premium play, as we call, in terms of the banking exposure if somebody wants to come into, and it does not correct much and gives you still 17-18% type of CAGR returns over the next 3-5 year period. But ICICI and Axis would be good tactical bets in terms of a little bit of valuation re-rating happening whenever the markets settle down. So my sense is yes, a combination of CASA-oriented banks or retail banks for that matter, and even certain corporate banks, when the dust settles for even Yes Bank, a good candidate being announced could also be a sort of a booster for the bank in terms of the future growth prospects as well. Of course, as I said, these are not recommendations. I'm just trying to explain the point via giving examples.
All right. Brijesh, come to you on Reliance, now at 1100 after today's 4.5% cut.
See, I've been seeing last half an hour there has been a buying going on. So that indicates right now, if we hold on the level of 1080, chances are there that 1130, 1145 can be achieved, or the rally can be extended to the level of 1160 also. But 1200 looks tough. I'm not looking. Reliance should give closing above 1200 in this expiry. So 1160, 1165 can be there. So if someone wants to play for a short term, keep a stop loss of 1080, or even for the BTST point of view, 1080 would be the stop loss, and target would be 1125, 1130. For short term, it would be 1160.
Just actually, can I ask a quick follow-up, Brijesh, on Hindustan Zinc? We're talking about losers all through. Hindustan Zinc has had a fabulous move, as has Adani Enterprises actually at 169. Do you like either of the charts?
See, Adani Enterprises, if I'm not mistaken, it has been quoting 169, if I'm not mistaken.
Yeah, 168.
Yeah. So, see, purely from a chart point of view, right now, immediate support lied at 161, 162. Deeper support has been concerned, then 155. But I am looking stock touching 175 to 178 level. Even the rally can be extended to 180. So definitely Adani Enterprise, one can look out for buying the stock. If I'm not mistaken, somewhere around 115 or 120, the rally has started and it's a one-way rally. It's still not been stopped, and with the increase in volume, that indicates the chances are that the rally can be extended to the level of 175 or 180.
Okay, just stay on. Devang, before we thank you, a word on the media stocks, the Hathway, Den pack, wherein now you have Reliance Industries becoming a key promoter. If you had those stocks in your portfolio, actually even if you didn't have the stocks in your portfolio, would you be tempted to buy them?
I think more seems to be like the juice seems to be out. Maybe the announcement has already come, and I think it could be in the price. I can go wrong by say 5-10%, but to my sense, there is a story which is building up, but most probably I think it clearly is not a trade which I would get into. Of course, there are other media plays because of election. I think clearly a print media can be one of the candidate, because for the next 3-6 months, I think we'll see a lot of sort of advertising that would start happening via print media as well as the television media or the electronic media as well. To me, it seems an avoid. Of course, they are not in the coverage list, won't be able to expand much. But to me, they are not trades which could be indulged. There are many blue chips which have fallen big time in this fall. They could be more on the buying list rather than this types of businesses.
All right, Devang, we'll leave it at that. Thanks very much for joining us. Appreciate you taking out the time. All right, that's a quick fundamental view coming in there, but let's move on to some other moving parts of the market. And though the tile makers may not be seeing the best year so far, analysts still seem to have a positive outlook on all the players in this space. Let's bring in Yash Upadhyay to understand what's making analysts bullish on this particular space in chart of the day. Yash, good afternoon.
Good afternoon, Devina. So it's been a terrible last 6 months when it comes to the tile makers. For all of the 3 largest tile makers, falling anywhere between 30 to 60% in the same period. However, analysts continue to maintain a positive view on the space. Let's take a look at Asian Granito, the smallest of the lot. Nearly 9 analysts have a buy rating on it and only 1 hold rating, making it the only stock on the list to have 0 sell ratings, while Kajaria and Somani both have 1 sell rating each and a return potential of anywhere in excess of 40% on an average for all the 3 players. Now, what is it that makes the analysts bullish on the space? Well, Edelweiss for one has a positive view on the sector, on the home decor space overall, and for the tile space, they maintain their upbeat view on the back of the benefits that they see from the implementation of the e-way bill and the government's focus on affordable housing to accrue in the long term, which is something that most other analysts too maintain despite the near-term headwinds of rising gas prices and a protracted slowdown in the real estate space, on the back of which they expect earnings for tile makers to clock at a 16.5% CAGR growth over FY17 to FY22. Back to you.
Okay, that's interesting. Well, let's wait and watch if that happens. Yash, thanks for putting that into perspective. As we slip into a break, though, hear out Vikram Kotak of Crest Capital, who says that volatility will increase as we head towards the elections. A slice of the conversation that he had with us on our special series, Navigating Through Uncertainty.
The point here is that yeah, definitely we are going to see a good amount of reset, particularly in the growth, because if you look at the growth has started in the Q1 with a bang of 8.2%, and with the crude going up, interest rates going up, liquidity conditions are not as easy as earlier. I think we can see growth momentum slowing down. If you look at RBI projection itself for FY19 is at 7.4%, and my own view is it will be much below than that. So we think the growth can settle between 7.2 to 7.3. And if you look at 8.2 has been achieved, so definitely growth momentum is going to slow down in the times to come, and this is impacted mainly by sectors like auto, which was doing extremely well before a few months, and now with the rising raw material prices and the crude prices and also interest rates, the whole tailwind which sector has been impacted. You look at NBFC particularly, that also has been, the growth will slow down. So earnings side, GDP side, inflation side, you will see actually downtick compared to what we are in a current scenario.
Let's talk about some sectors that you find value in currently. We already spoke about autos and the kind of pain points that we're witnessing in the auto space as well. Volumes have been coming off a bit, but nonetheless, over the long term, the benefits seem to be pretty evident in terms of higher penetration for some of these automakers. But overall, individual sectors that you are finding value in at this current market standpoint?
Sure. So we, I reiterated this in earlier couple of interviews with other channels and your channel also, that What we like right now, and we discussed about the NBFC versus private banks. So I think let's start with that. So we think the private banks is a big opportunity from here on, because we've seen a lot of mess has been clean. Banks have not grown as fast as NBFC, and they are sitting on a lot of leg room. They are also kind of coming out of the NPA cycle, NCLT resolution, and a very solid retail franchisee they have created. So I think there's opportunity for private banks to do very well, and I think private banks can give a decent return irrespective of market condition going from here. So that's a one sector which I like a lot. The pharma is the other sector which we like a lot. We believe that the US generic pricing pressure is almost at the bottom. The domestic growth has been very, very healthy. We have seen also the very strong balance sheet of most pharma companies. They don't have leverage. There's strong management. There are strong ROEs, and combine all, and plus new product launches. So I think pharma, and also mind you, the rupee tailwind also playing with them, and sectors have not done well over the last 3 to 4 years. So opportunity in the pharma is looking extremely good for both absolute return and the hiding place. Third, we like the three sectors we like: private banks, pharma, and the cement. Cement we like because we believe that the capacity expansion which was happening for the last 5 years was close to 11% per year, and that was the peak of capacity expansion. Now this capacity expansion will go down to 2-3%. So you'll see a slower capacity expansion and higher growth. Last 5 years, the capacity expansion was 10%, growth was 4%. We believe next 5 years, the capacity growth will be 2%, and you'll see a cement demand growth of 8 to 10%. So cement is the other sector, plus valuations are very depressed. Again, the balance sheet quality is much better, much superior, and the overall economy, if you look at from the infrastructure point of view, we are in a pretty good shape. So the demand, the base demand for the cement will continue likely to kind of do well. And there's one worry for cement is the raw material price pressure. I think that is more or less been passed back to the customer. So I think cement is one sector which we think that can do well. Pharma is the other one, and the private banks. These three sectors we think will really do well in a coming period.
You're staying away from the defensive bias, the defensive pack bias that most had up until now. The defensives.
Which one you're talking about? Consumer particularly?
Yes.
So consumer is looking good. No problem with the consumer, because the demand has been strong. Rural demand has been strong. Hike in MSP, election year. So I think rural demand on consumer side will remain good. But the only worry, Devina, I see is they are extremely expensive. And when you have so many headwinds on your head, you can't buy super expensive stock and hide there. Because if you have 1 quarter of disappointment in this sector or stock, you might see a big correction, and that's what happened in the pharma 3 years back. It happened recently, the consumer stock. So I think my view is that consumers are good to be there, but 40, 45, 50 times valuation is super expensive when the overall market is at 15 times. So, and particularly when you have the lot of headwinds coming on your head. So I think I'll stay away from consumer. As I told you, NBFC partly we don't like. Lot of stocks in the NBFC also we don't like here.
But what about the good parentage names within the NBFC space, which were trading at elevated valuations when the market was in the uptrend, but now they've corrected significantly, and the values that you're getting seem to be working in your favor?
So good NBFCs which has strong parentage, very good balance sheet, very well managed ALM will, as I told you, after this 3, 4, 6 months of initial hitch up, they will start doing better. They'll start gaining market share, and I think there's opportunity for all the NBFC to grow their balance sheet. So, but the point here is that, do you want to buy now after this 30-40% correction, or you want to kind of see there's going to be a kind of final resolution to everything, whether crude or whether the ILFS or all this stuff. So I think we need to kind of time it better in terms of where to buy. But again, as you rightly said, for compulsive investors, it's a good time to cherry pick. For absolute investors, I think there are going to be headwinds, so we'll kind of wait to buy in the markets.
Just last few questions before we let you go. From a retail investor standpoint, is this the right time to start re-evaluating their portfolio, trying to see where they can probably curtail the losses if they have slightly more high beta, mid cap and small cap names, and replace them with the higher quality names?
I think this basic message to every retail investor is always there, that you can't chase growth just based on the numbers, because you've just seen recent carnage. So many promoters have been failing, so many companies have been failing. There are so many down circuits on the management, and a lot of people have been stuck there. So my advice to retail investors is one line: you can't time it the market. You have to keep on buying like SIP, or on a bad day you can top up the SIP or buy in a big bulk. Try to go to mutual fund. I think my always advice to retail investors that don't come to anyone else. Just go to mutual fund. They are good guys and they understand the size is there. And go and buy high quality large cap companies, because you might get mid cap growth, but I think mid cap also has the accidents, which is, or small cap has the accident which is happening. So as of now, in this kind of environment, I'll definitely suggest retail investors to buy large cap and just go and keep on doing the SIP with the mutual fund. That's the best way to play the market. You can't play based on the tips, or you can't play based on some advice given by some unknown fellow.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, raise? अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, but पॉलिसी समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities, और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर generation की पसंद.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. Only on Bloomberg Quint.
Back with the markets, 28 minutes left to go for market closing. We've got the Nifty and now moving back under the 10,300 mark. Banks down about 0.5% in the session, so not so much so for the banks, but the main drag on the index also coming in from the heavyweight Reliance Industries, which is down closer to 4%. That's the bank Nifty for you. But before we move on any further and talk more about specific stocks with our guests, let's find out what has made it to Yash Upadhyay's list for Fab 4 stocks of the day. Yash, good afternoon.
Good afternoon, Meghana. So the first stock on my list is actually Jet Airways. That one is seeing strong gains in today's day of trade, up almost about 6.5%. If I'm not wrong, yeah, 6.5% today on the back of a PTI report that Tata Sons is in talks with the company to acquire an initial stake of about 26% and an additional 26% stake later on following an open offer. NIIT Tech is also in focus, up 4.5% today on the back of Anti coming out with a report maintaining their buy rating on the stock, but have raised the target price to 1,700 rupees, indicating a return potential in excess of 40% from the current levels, as they expect NIIT Tech to be the fastest growing mid-cap IT company on the back of a robust growth outlook and strong deal pipeline. Hathway Cables is up in trade on the back of obvious reasons. It's up 3% after Reliance Industries said that it will be acquiring 51% stake in the company for a total investment of about 2,940 crores. And Hindustan Zinc is the volume buzzer today. It's up about 6.5%, has surged more than 8.5% on an intraday basis, the most since February 2018. Back to you.
Okay, thanks a lot for that, Yash. So, well, those are a few stocks to monitor. Actually, we haven't spoken about Jet Airways at all today. at least on the show thus far. That stock is up about 6% too. Brijesh, for somebody who was long on Jet Airways, just looking at the market uncertainty, would you take money off the table?
See, obviously, overall, the trend of the chart is still been down in the Jet Airways. We have seen a correction from 870 odd zone and up, and it went down all the way to somewhere around 150 or 160 after we have seen a pullback. So I would not be suggesting to play Jet Airways because the chart, as I said, still has been in that downtrend. It required to give closing above 320, and then only we can see, from a medium term point of view, the stock has come out from its bearish zone. As previously you have been talking about Hindustan Zinc, definitely the chart right now are very much promising. 286 has been quoting, so suppose someone wants to play for a BTS's point of view, any dip somewhere around 284 or below that, one can take a buy call with a stop loss of 279 and play for the target of 292, or for the short term time play, I am looking stock touching 300 before any profit booking comes.
Meghana Malkan of Malkansview also with us on the show. Meghana, good afternoon. Thanks for joining in. How are you approaching trade this afternoon? The Nifty is down about 1.5%. What would you be doing here?
Good afternoon, Neeraj. Yes, I am though approaching overall market reluctantly. What I do believe is, in spite of all the movement that's happening across sectors, I believe public sector banks, as of now in this week, the plan for this week is to stay safe by sticking on to public sector banks, which I believe are doing very good and which I believe are at a good support. So I think they're a safer bet. Nevertheless, I do believe Nifty is at a good support. I do not see much of a downside from here, but public sector banks are a safer bet. So Bank of India and Oriental Bank are the two things that I would like to approach this week from the long side.
Okay. Stay on with us, Meghana. Deepak Shenoy is also here with us. Take us. All right, he'll be joining us in just a few moments. But a few other stocks that probably this week have held on to gains in a falling market, while the index per se itself is down closer to 1.5% for the week by the end of today's trade, if nothing drastic happens, is an ITC and a Dr. Reddy's. Both of these stocks with gains of more than 4% apiece. Brijesh, how would you approach an ITC and a Dr. Reddy's?
See, definitely ITC is looking much more promising than Dr. Reddy's been concerned. I am looking stock 299 to 300 on level in this expiry, or say might be first week of November. Right now, suppose someone wants to play for a shorter term bet, then 289 has been quoting. So I'll suggest him keep a stop loss of 284 and buy. One can take a buy call for the target of 295 for short term. I'm looking 299, 300, and after that 310 is a level where the supply zone has come up. Regarding with the Dr. Reddy has been concerned, stock still on a daily chart has been moving on the higher bottom formation, which is still been bullish. So 2558 to 2560 has been quoting. I'm looking stock not breaking 2500 level in this rally, so one can keep that thing as a stop loss. At the present juncture, any dip somewhere around 2530 to 2535, one can take a buy call for the target of 2660 from where the supply zone has come up.
Okay. Meghana, I heard you mention about a couple of ideas fleetingly as to how you would go out and play them. Would you care to elaborate? What are the ideas, stock-specific ideas that you are putting into ploy today?
Yes, the first one of it, I would like to put a long trade on Bank of India. If you see the monthly chart, the stock is at a very good support. The momentum is taking support at 40 level, which I believe is the lower level for the bullish zone. The candlestick patterns that have been forming in the weekly chart are indicative of exhaustion of the down move and consolidation happening on the downside. So all these factors, coupled also with the volume, I believe are they're in for a very low risk setup in the Bank of India. So I think Bank of India should be a good trade to buy with a stop of 73 on the downside. It could be a positional trade which could take you to a target of 89.
Okay.
And the second one that I like from the banking sector again is Oriental Bank of Commerce. This stock again is displaying the same consolidation and the holding signs in the bottom, which call for a very good low risk trade. So Oriental Bank again could call for a very low risk setup or with a stop loss of 210.
My final question, Meghana, since you're talking a lot about banks, I would want your view on Kotak Bank. That one is up 2%, rock solid today, 1201. Is there a trade here?
Yes, Kotak Bank is of course stronger than most banks. If you see the monthly chart, it's taking support on the 20-period moving average, which is again a very good sign. Momentum on the daily charts, if you see the momentum is also giving good signs. Volume is good today. So Kotak Bank, of course, but I do believe on the current rate that the Kotak Bank is, the risk is higher than the reward on the upside. We do have resistance, if you see immediate resistance on the stock. So I believe not a right time right now to get long into Kotak Bank.
Okay, Meghana, stay on. Lots more to talk about, but getting a fundamental voice on the show, Deepak Shenoy of Capitalmind joins us with his thoughts on the markets. Deepak, good having you. Thanks so much for joining in. You know, I was looking at this week's performers, and no-brainer that financials would have been hit because NBFC stocks are right up there when it comes to losers. The interesting bit is, if you just do the MRR function on the Bloomberg terminal, the top 10 losers, 5 of those are auto names. All of them having double-digit losses. Almost every single time that NBFCs have fallen, we've also seen auto stocks come off, Deepak. What's happening here?
I think, Neeraj, the interesting thing over here is the linkage. I don't think is direct or linear. There is a double impact. One thing that happened is as results of, as you know, we've been seeing a potential result expectations. Some of them have come in lower than expectations, or the expectations have been lowered recently because financing for cars or for two-wheelers has come from an NBFC world. So there's a bit of a there's going to be a bit of a time before people shift over to say banks because lending will not automatically go off. HDFC's bank's biggest portfolio is still auto lending, so I don't think that's a significant problem. But the second part of the equation is that there's actually been a bit of a slowdown in terms of growth in the auto sector per se. I believe that is a temporary phenomenon, may last another quarter or a couple of quarters, but at this point, the impact of oil prices is much lesser than the impact of actually good quarters earlier. So this quarter is not going to look great from a comparison to earlier quarter. So I think a bit of correction has happened. Having said that, I think a lot of stocks, especially in the auto sector, most of them, remember, are zero debt. They actually pose a very attractive buy, I think, for the longer term. I'm biased because I've bought them, but I feel especially in two-wheelers and in commercial auto, there is a significant upswing possible here from price perspective and valuation perspective.
All right, that's the auto pack as a whole. The IT pack as well, Deepak. I mean, we've got a lot of these mid-cap companies reporting numbers, and the street has punished them heavily for not beating the street expectations. TCS also, got a bit of a hit the day it reported its numbers, while Infosys beat street expectations and got rewarded for that. How are you reading into IT as a pocket?
No, IT, I think, has done spectacularly well in results. I know expectations were high and, markets will punish or reward based on what they think they want the stocks to do in the shorter term. But the trend here is significant. We're seeing a fairly large jump in terms of earnings growth compared to what we were last year. And NITech did, 60-odd%, Infosys did 40. We've seen even a Mindtree did, a significant number. So we're talking 35-40% plus low or no debt, significant re-rating in earnings possible in the next quarter as well, because we're looking at a higher dollar, their hedges will wear out, so the dollar impact will be even better. We're seeing record employment in the US, which means outsourcing of work is going to increase, not decrease. We're potentially seeing some visa issues, which is again good for most Indian companies which have been trying to do more work offshore and hire locals onshore. So I think that is another positive. And I think, from the perspective of IT, the bigger problem will be a slowdown in the world economy, not really what seems to be happening in the short term. So I'm positive on IT. I don't have enough IT, unfortunately, to say that, we're super long it, but I think it's a good time to pick stocks here as well. If they're down 15-16%, they might come to much more acceptable levels in some cases than they were maybe a week or two ago. So, I think again this poses an opportunity. I don't see any immediate risks to earnings as far as I see.
Brijesh, what are you making out of mid-cap IT and specific? We've spoken about Mindtree, but on the other hand, an emphasis for that matter, how would you read into the play there? And also TCS from the larger names.
See, if we talk about TCS, first of all, 1918 has been quoting right now. So for a shorter term playback has been concerned, then 1850, 1855 is a level it should hold on. It should not break that level. And below 1900, definitely one can take a buy side in it. On the higher side, 1965, 1970 would be acting as a resistance. Anything above then there are chances that stock has a chance of going all the way back to the level of 2025 also. But there are few stocks which looks good on the chart from an IT point of view, from a trading as short-term trading has been concerned. One is NIT Tech. The stock right now has been quoting somewhere around 1235. So if someone wants to play for a shorter-term bet, then definitely anything below 1200 would be the ideal level to buy for the target of 1350. 1375. This I'm looking for a 1 month time frame, and suppose someone has a view of a 6 month plus, then 1050 would be the level it should not break, and chances are that stock can make a new 50-week high and touching 1550 to 1600 odd level. KPIT has been trading in the range of 200, 202 on the downside, followed by 225 on the higher side. Right now it's been quoting at 212. So anything somewhere around 208 to 209 if it comes, then definitely one can take a buy call with the stop loss of 202 and look for the target of 220 to 225 juncture. Tech Mahindra on a weekly chart has still been trading in a bullish wolf wave pattern. Which, yeah.
No, fair call. Just finish your point on Tech Mahindra, Brijesh. No problem.
Yeah. So it's giving still it's been trading in a bullish wolf wave pattern with giving a target of 850. So right now it's been quoting at 690 juncture. So 670 to 675 is the ideal level, where the risk reward ratio has been concerned. So one can take a buy call here with a stop loss of 625 and play for the target of 850. This I'm looking within a 1 year time frame. As a disclosure, Tech Mahindra we have recommended to our client also.
Okay, stay on, gentlemen. So much more to talk about. Let's get a sense of what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Yatin, let's start with you first.
Neeraj, there is sure pain in the NBFC space. Day before also we saw some good selling coming in. Today also, repeated selling coming in those names, even where the management have clarified, on their stance and order book. Probably, banking shares are gainers here because they probably would take the market share away from NBFC is what the market chatter is right now. So Kotak Mahindra Bank, that is one stock wherein dealers on the basis of trends are talking about a buy today, sell tomorrow kind of a strategy. Also on the flip side, we have L&T Finance Holdings wherein dealers expect more pain to come in, and this is where they recommend a STBT today. Stock is down almost 1.5%, was up almost 3% in the morning. So we have seen a good correction from the day's high as far as L&T Finance Holdings are concerned. So the selling persists at higher levels. And finally, in the cash segment, United Spirits is one stock wherein dealers are indicating that HNIs are accumulating the shares at low level, and they're also recommending their client to buy the shares of United Spirits at low levels. Of course, there was some negative news in the morning regarding how Maharashtra can increase excise duty on alcoholic products. That is playing a dampener in today's trade, but United Spirits is there on the buying radar for dealing rooms. But Darshan has a few more stocks to talk about.
Yeah, I think oil marketing companies today are doing well. The way crude has moved, the way the rupee has moved, again, some of the funds have started accumulating. Valuations clearly in favor of oil marketing companies, but the risk of government interference always there. But nevertheless, there is accumulation given these factors as the counters have fallen significantly. Among the NBFCs, it's a clear avoid, but Bajaj Finance, for one, is showing relatively better strength compared to its peers. It's trading with the minor cuts in today's trade. So some of the HNIs have accumulated. The counter no doubt has fallen from levels of 3,000 right up to levels of 2,100. Mindtree again pretty much near the lowest point of the day. Dealers indicate that valuations are still attractive. It was a classic case when valuations were too expensive and any kind of mistake would lead to some kind of selling. That selling has happened. There could be more potential downside given the fact that numbers were weak and rupee has now started to appreciate. So that probably will go against some of the IT stocks. So Mindtree is the last one.
17% down for Mindtree, Darshan, thanks for that, and 17% down for Indiabulls Housing Finance as well, 651 and counting. Bad gashes here. Deepak, two names that I want to talk to you about, and you want your opinion really. One of them is Indiabulls Housing Finance, despite all the assurances from management and from sell side as well that the risk reward is in favor. And this was the call on Wednesday morning, and the stock has lost about 10% since then and 17% in today's session. The other one is Yes Bank, which had a brief rally, went up all the way to 1.4, 1.5 times price to book, or 1.4 times price to book, is now cooling off again 10% in the last 2 days on the back of what the RBI said. How do you approach both of these names which have some overhangs around themselves?
Firstly on Indiabulls Housing, I think it's great on terms of dividend yield. They're giving 10 rupees of dividend despite all these challenges in terms of cash flow. I think that's a good thing. They give 10 rupees a quarter approximately. They started off with 8 and now they're at 9 and now it's 10. So that's a 1.5% a quarter, which is a 6% dividend yield. Pretty phenomenal in that respect. But obviously one has worries about the book. There is a significant developer exposure, and perhaps that is one of the key problems right now, is to figure out how that will be resolved. Indiabulls Housing per se has been pretty good at being able to recover. So some of the structures that they have in place give them a slightly better ability to recover than many banks have in terms of similar developer exposure. So I feel that much of this will evolve in the next few days. But what is more primary is that the price is kind of showing you some significant breakdown. There is perhaps more news that's out there, and we have to perhaps wait until as some of those news comes in to make final decisions. If you're a trader or looking at a short-term approach, then obviously at this point everything looks like it's on the downside. I would prefer to wait until I buy, unless you're looking at dividend. I think it continues to be a strong stock. Solvency issues could obviously complicate matters, so that's the key risk here. On Yes Bank, there is no major problem in the bank per se. I mean, there are some, of course, exposures that we don't know about. We did a rough calculation and said, listen, if they take a 5,000 crore NPA also, then that's the excess NPA that RBI had reported last year, that was greater than whatever Yes Bank had reported. I don't think that will significantly hurt Yes Bank's books in terms of the price damage that's already been done. So even then it will be at a 1.2, 1.4 times book. And I don't think that is a significantly high valuation. So I think it's fairly valued. I wouldn't call it a bargain just yet, but at a 1 time or less than 1 time adjusted book, adjusted for this extra NPA, it would become much, it's almost a no-brainer buy at that point. I think the resolution with RBI, it's pretty clear where RBI stands. They are not going to let Mr. Kapoor stand there for any significant amount of time. They've got to find somebody, which is, I think the stand that they've been consistent with. Yes Bank needs to do that soon, find a person that they'll all find amenable and move on, because they have a fairly good retail franchise, and I would hate to see that getting distorted just because of issues between RBI and Yes Bank in terms of managerial control. So I think over time this will evolve. I don't think it's underpriced or cheap right now. I think it may be fairly priced, but I look forward for it. If it were to fall more, then it becomes more attractive than some of the other banks out there.
All right, we're just about 8 minutes away from market closing, so just want to quickly get some strategies going from our guests. But before we do that, one last question to Meghana before we thank her. Meghana, anything in particular that you like right now from a price point of view that seems to be attractive for an upside?
Yes, if you see based.
All right, I think we've lost Meghana there. I will try and patch that line. But Brijesh, I'll come to you. Any closing strategies that you would like to discuss?
2 calls for a BTST point of view. One would be MRPL. increase in volume has been found out in last 15 to 20 minutes of trades. Right now it's been quoting at 85 rupees 10 paisa. One can keep a stop loss of 82 rupees 50 paisa and play for the target of 89 to 90. And if someone has a view of shorter term, then keep a strict stop loss of 77, and chances are that 100 and 102 can be achieved in a 2 weeks time frame. Second call would be National Aluminium. Right now 67 rupees is been quoting somewhere around. Keep a strict stop loss of 66 and play for the target of 70.
Okay, that's Nalco there, one of Brijesh's picks at 67. Deepak, did you see the numbers that came out from Ultratech Cement? I mean, both Ultratech and ACC, seem to have disappointed the street with the kind of numbers that they posted. Ultratech was down 4.5% post the numbers, now has recouped some of those losses. But what's your overall sense for the space and these two in particular?
I haven't seen Ultratech numbers just as a disclosure, but I think, they're going to be one of India's largest, or they are already India's one of the largest cement companies, but they're consolidating substantially. There's JP that they're consolidating. They're buying Century's cement arms. There is perhaps more that will come out from NCLT once more companies go through it. So there is going to be a significantly higher cement, capacity that they will have. Having said that, Ultratech's not cheap. So you can't grow at a 15% a year or 18-20% a year and then command a 50p with a product that is largely a commodity. So I think from that perspective, Ultratech's correcting largely as a valuation. There was extravagant valuation, and therefore we're correcting more rather than pure fundamentals. I don't see cement demand coming down, but cement demand hasn't grown substantially either. So it's not something that you would want to price at a 45, 50, 60p. And this was applicable to ACC as well and Abuja as well. I would say the lower valuations just bring them to more fair levels. So price falls, I would not consider them, extraordinary at all at this point.
Okay, Deepak, we'll leave it at that. Thank you so much for taking the time out and being with us, and well, have a better weekend. If you're a bull, then we'll need a better weekend. But anyways, thanks Deepak, thanks for joining in today. Okay, just before we wrap up the show, we've spoken a lot about stocks which have fallen quite a bit today. Let's talk about a couple of gainers and stocks that we haven't discussed today. Brijesh, just before we start the market wrap, a quick thoughts on HPCL as well as Sun Pharma, the top two gainers on the Nifty.
See, HPCL, as a disclosure, in a personal portfolio I've been holding. So right now the stock has been quoting somewhere around 215. So if someone is looking for a short-term bet, then 180, 185 is a strong support. It should not break that level right now. So another support lies at 202 to 204 juncture. So there are two important support. Whereas on the higher side, 225, 227 is the immediate base of resistance, and the tough resistance line in the belt of 265 to 270. So for a short-term play for a week or say then at 225, 227 can be seen on the chart. I'm not looking stock breaking 202 or 204 odd level, and chances are that 225, 227 can be achieved. But 265 is a milestone right now, so it would be taking time. Say it might be 3 months or might be a 6 month. Regarding with the, if I'm not mistaken, Sun Pharma you talked about?
Yes. Brijesh, we'll take the thought on Sun Pharma after market closes. Just 2 minutes left for market to close. So let me wrap up the markets first. And on close, about 1/3% and 1/3. So that's about the Nifty, 140 odd points or 400 points for the Sensex. Must say we're not closing at the lowest point of the day. This is a bit of a relief. 10,300, we are managing to hold that level. The Nifty bank to about 1/3%. The mid caps and the small caps, no carnage here, I must say, about 1%. This could have been just another normal day in trade. But quickly, let me talk about the large caps, and then Devang will bring you up to speed with what's happening in the mid cap and the small cap end of the market. So HPCL up about 4%, Sun Pharma about 2.5%, Kotak Bank about a couple of percentage points, gains for ITC as well as HUL, so about 1% higher. Good going for those names. What's not doing well? Indiabulls Housing Finance 16% lower. This is a bear market of another magnitude if you are in some of the NBFCs. HCL Technology is 7% higher, lower rather. Yes Bank corrects another 5% on expected lines. Reliance Industries is an example of what happens when you don't beat estimates. HDFC is corrected about 4% too, by the way. Tech Mahindra, Infosys are amongst the other names which have corrected, and then Hero MotoCorp and Tata Motors amongst the top losers on the Nifty for the week as well and for the day too. What about the mid caps, Devina?
Well, like you said, the index per se, there's not been much of a gash, but there have been individual stocks which have been seeing quite a beating in today's session. We'll quickly highlight them for you. So starting off with what's been happening in the infra, NBFC, real estate pack. You start off with the Shrey Infra, which loses double digits in today's session, closer to about 10-odd%, picked up from the lows of the day at 28. Devang Housing is the other one. Perpetual losses there since quite a few days. The stock's down 11%. PNB Housing sees a heavy cut of more than 15% in trade today, in fact 18%, and that's seen a clear trend down from the start of the trading session. RBL Bank is the other one, along with JM Financial, that see some pressure amongst the mid-cap IT names. Mindtree was the one that seemed to disappoint the street, and the stock was punished about 16-odd%. Repco Home Finance loses in trade today, along with the Dish TV, IRB Infra. I'm just going through the names of stocks which have seen heavy cuts of more than 5%. India Cements is the other one, and Persistent System also loses out in trade today. Amongst the gainers, just to highlight a few of them, Jet Airways on the back of the news of Tata Sons being interested in picking up stake, finally closed with gains of about 4.5%, but intraday highs of closer to 6.5% for Jet. DLF is the other one that closes with gains in the session, quite contrary to what some of the other peers are doing for the real estate space, up 6%. Hindustan Zinc, Page Industries, Jubilant Food. So the consumer space once again lights up in trade. Future Consumer, Jubilant Food, like I said, Gujarat Pipavav and PFC are some of the other names that have made it into the green in today's session. But nonetheless, if you have to take a look at the weekly snapshot for the index, it seems to be pretty fragile, almost about 1.7% given up this week.
Yeah, and led predominantly by financials as well as auto names, I presume, which are the big culprits. But this is, of course, for the week gone by. And as you can see, Indiabulls Housing Finance, Yes Bank, iShare, Bajaj Finance, Maruti Suzuki. That's the set of names which have lost out the most in this week. Since we're on the topic of the week, let's highlight the mid-cap and the small-cap cuts too before we come to the turnover and what the advanced decline for today's session would have been. But let's just bring up the mid-cap index. And
this is the mid-cap index. So the kind of cuts that we've seen across the board, obviously Devang Housing Finance, PNB, these are your usual suspects in the list of losers, losing closer to about 20-odd%. But Mindtree probably the biggest loser there, with losses coming in majority of the losses today.
Entirely.
And gainers, you have your Jubilant Foodwork, Graphite India. So Graphite India, like we've been always, on upper circuit for the last few trading sessions, probably leading to that little bit of a bump up that you're seeing.
Yeah, and a couple of future group stocks out there which haven't done too badly. And for the small cap space, Rupa and Company, NIT Tech, Jet Airways finds its way in the list, which is actually good news for that counter. After a long time, you're seeing it in the top gainers list for the week. 4 days, remember, truncated week. And the losers list, Trident, interestingly, despite some very strong numbers, and maybe the large portion of the pull happened when the numbers came out last week, but correcting a little bit in the session. MMTC, Shrey Infra and Repco Home Finance again. The NBFC list, Devina, looking slightly weak.
Well, we should pull up the market breadth and the contributors on the index for today's session at least, and see how it's moved. So as we see it, almost 1:3 in favor of the declines, and from the start of the trading session, it's pretty much held on to that number. Amongst the Nifty contributors, it will be safe to say that Reliance Industries was right at the top in terms of the losers. 46 points knocked off of the index. HDFC is the other heavyweight there, which adds on to the pain, and Infi also losing 10-odd points.
Yeah, not enough gainers, save for a Kotak Bank. It was up about 2% in that too late trade. Otherwise, fairly lackluster, a very defensive nature to it. Just the turnover very quickly before we get in final thoughts from Brijesh. We're going to ask him about Sun Pharma too. The turnover, the par for the course, is pretty much the cash turnover though, higher, 27,000 crores. Anyways, final thoughts from our experts. Brijesh, you were making your point on Sun Pharma, so maybe finish that and then just give us a sense of what the Nifty could do next week.
See, Sun Pharma still has been trading above 585 junction. There is a recent swing low. So I am not looking that thing broken right now. And chances are that 625, 630 can be achieved. Anything on closing basis of 630, another say 20 rupees or say 25 rupees can be seen. So it's looked a little bit promising from a short-term bet has been concerned. Regarding with the Nifty has been concerned, as I said, 10,370 would be, or 10,375 would be acting as a resistance, and chances are that we might try drift below 10,220 junction. So coming next week has been concerned, the expiry would be there. So I'm looking once there would be a panic selling, and chances are that we might try to break a recent swing low, that is 10,138, and 10,070 can be seen on the chart. Only thing is that the bank Nifty has been trading in the narrow range, which is giving a little bit bullish sign. So if till it's been trading about 24,750, little bit saving would be there from a Nifty point of view. Otherwise, if this thing starts selling off, a bank Nifty sell off, then chances are that expiry might be below 10,000 also.
All right, Brijesh, we leave it at that. Thank you so very much for joining in and sharing your views with us right here on the show. That was Brijesh Singh with the technical perspective. All right, and with that, it's the end of Countdown. Thanks a lot for watching. It's a goodbye from Neeraj, myself, and thanks from the entire team that put this show together.